Good morning, everyone, and welcome to the Ankerstar Wealth Morning Show. I'm your host, Allison Ankerstar, and today we'll be talking about the upcoming earnings season, possibility of nuclear war, and options for your 401k. Before we begin, as a reminder, this is a financial education presentation and should not be construed as personal financial advice. Full disclaimer information is available at ankerstarwealth.com. Good morning, Steve. Earnings season for the third quarter starts this week. What do you expect to hear from companies?
Well, good morning, Allison, and hopefully everybody had a good weekend. The earnings season does start this week. So that when you think about the big picture of, 2022, the storyline, right? Inflation, then you have the Fed rate hikes, and then officially we had two negative quarters of GDP for the first two quarters. Therefore, we're technically in a recession. The government says we're not yet because of full employment. So we got to have all those things going on. Well, to kind of figure out whether we're in a recession or not, the earnings kind of tells the true story for each company individually. And then in the aggregate, all of them put together gives you what's called that earnings season. Some percent of them will beat earnings, some will not. And that will kind of give us more of a litmus test on, are we in a recession or are we not? And if so, because I think we are, but how much of a recession are we in? It'll tell us how bad the impact is so far. So that's the importance of this week's earnings season. This is only one. I mean, that's a kind of a, the headline is early indications. Well, 20 companies have reported so far out of the, 500 in the S&P, excuse me. So, right, not many, right? So all sectors are up overall, but excluding energy, they're down, right? So energy has really propped up the market as far as earnings. So you look at kind of the major sectors here. Communications down 10%, financials down 3%, so the others down barely, and then technology down a little bit. But really, you have the energy market kind of holding things up. So we shall see. When you really look at the sort of people that are going to be announcing this week that kicks things off, we have PepsiCo, Delta, Walgreens, Domino's, all the big banks, the JP Morgan, Wells Fargo, Morgan Stanley, Citigroup are Friday morning. So really, as we, as the week unfolds, even though today's a holiday, the market is open today. Bond market's closed, stock market's open. But yeah, we're going to see more of where we're going with the market. Obviously, we're sitting right at lows for the year, if you will. So kind of does this hold, does it not, from a technical perspective, but from a fundamental perspective, this is what earnings tell us. We kind of know what we have on our hands going into the fourth quarter of this year.
Next, the potential for Russia's President Vladimir Putin starting some form of nuclear war is all over the news. How would the use of either a tactical or strategic nuke affect the markets?
Yeah, there, and you can kind of see as the next headline, Russia blasts cities in Ukraine. This has been going on for a while. But the question becomes really is what if we, and this is the New York Times, what could happen here? Well, as this war rages on, again, it's raged on most of 2022, the potential, if Russia starts losing, the thing that you have to chart out as a military strategist is there's two options that involve nukes. You could use a tactical nuke, which means you use a battlefield type nuke on a city in Ukraine, or their people, or both, or their armed forces, or both. And then the other one is strategic. What if we would lob a nuke at the United States, right, out of an act of desperation? Well, I grew up, and Allie, it's probably hard for you to imagine this, but I did grow up during the Cold War, if you will. Where honestly, when I was your age, I thought, we're both going to, Russia and the U.S. are going to wipe each other off the face of the planet. There's times where I remember saying as a teenager that I'll never be 30 years old because we'll all be dead because of nuclear war. Obviously, none of that happened. We thought better of it. But yeah, I mean, that was the real threat. I mean, real threat. That was kind of what everybody assumed was going to happen back then. And that's 50 years ago, 40 some years ago. But it's kind of crazy that this is back in the conversation. But yeah, don't forget that, a lot of companies out there have nukes, and if they use them, that's a game changer. So using one on the battlefield, obviously that would be met with a pretty harsh response. I do think at that point, if Russia would do that, we would enter a third world war. And that could look like a lot of different things. However, obviously, if one was launched towards the United States, immediate world war at that point, and we'll see how it plays out. I do think that we would, or if one nuke came and hit an American city, I don't think we would respond with nuclear force. I do think we would use conventional forces to respond, if you will. However, if you start looking at multiple nukes, then we're kind of back at the end of the world scenario, right? And we haven't really talked about that in a long time. So that's the danger of having people that are somewhat unstable. I wouldn't say unstable, and that somewhat nothing to lose attitude, if you will, in charge with Vladimir Putin, is that he may go out with a bang, and in this case, a significant bang. How would that affect your money? Well, that's obviously would be a game changer in the world. The market would drop certainly. At that point, we'd have to assess what's going on. I think it's a low probability, so we're not making any moves right now for this, but it's certainly one of the situations that we are monitoring out there.
Last, when a person switches jobs, what options do they have for their 401k?
Yeah, so for your 401k plan, basically you have three options. This is Investopedia here. So, this goes into a lot of how they work and contributing. The important part is what happens when you leave. Everybody knows that when you show up at your job, you sign up for the 401k, you sign up for a match if they have one. You're going to, at that point, that's free money, right? And then you have all the way up to the limits, depending on your age. Over $20,000 you can put away into these things. So anyhow, it's a good way to use your employer to save for retirement. Now, what happens when you leave your job, or if you job hop, if you will, basically you can take the money out, right? You're going to get taxed on that. And if you're not 59 and a half, you're going to face a 10% early distribution. So you can leave it there. If you can leave it at your old employer if they allow you to do that, or you can roll it over to an IRA. That's where most people do that. Open up an account. I use Schwab with my folks for custodian. That's what I use. That's who I broker through. But you could do it with E-Trade or Fidelity or Robinhood or whoever you choose to look up and find online. So again, you could either take it out, you can leave it with your old employer, you could roll it into an IRA, which is what most people do, and then you could also, if you have the option, if you're getting another job, you can move it to your new employer. So really four options there for a 401k. So anyhow, if you're going to make a move like that, you probably should talk to somebody or spend a significant time educating yourself as to the options out there, so you make sure you don't trip any tax rules. It's not the most complex thing in the world, but certainly something you need to bring an expert in to make sure you do it correctly.
Thank you, everyone, for your questions. Please submit your questions as a comment through social media or directly to our email at vipservices@ankerstarwealth.com. And don't forget to like and subscribe to get daily updates. That's all we have for today's show. I'm Allison Ankerstar, and we'll see you back here tomorrow.